This is the Friday, September 28th, 2012 version of the Market Plus segment. Joining us now is Tom Fitzenmeyer. Tom, welcome back.
Thanks, Mike.
We didn't get to talk about cotton in the show. Where do you see cotton going?
Well, we're sort of in the middle of the harvest pressure on there, so I think that's going to get wrapped up here fairly quickly, so that pressure is going to continue or kind of go away here fairly soon. But I think you're going to continue to see pressure on cotton. That's completely tied to what goes on with us in China. Chinese demand for cotton has been waning, and I would guess that's going to continue. So I would guess if you catch any kind of recovery rally post-harvest, I think you'd want to be a fairly aggressive seller of cotton.
All right. And do you see that trend continuing?
I do. I don't see any sense in holding it.
Okay. All right. That's in a long-term.
Right.
Long-term.
Now, maybe next year, I think they're going to lose a lot of acres to corn and soybeans. So you're probably, next year's crop is probably going to have some better value. The old crop, you're going to have to store that for quite a while to participate in that.
All right. So definitely keep that in mind as the producers are out there.
Right.
Move it.
Yep.
All right. Well, we got a couple questions from Twitter here. Matt in Izetta, Illinois is asking, what should producers be doing with their 2013 crop? What do you see for corn producers and bean producers out there?
Well, the corn producers, the expectations are that we're going to have a bigger and maybe even substantially bigger acreage next year. The big concern, obviously, is that we would have practically no subsoil anywhere. Everybody's dry, and so there's a lot of apprehension about selling that crop. The problem is we're going to have a bigger acreage. Probably, eventually, we're going to get some rain. We learned this year we can grow corn on minimal amounts of moisture. And we're in the process here of killing off our demand. So I think that if you can get December of 2013 corn up in that 650 to 680 range, I'd certainly want to be get right after getting some corn sold there. Now, if you don't like that and you're uncomfortable with it, then maybe find yourself some sort of an option strategy that allows you to at least lock in a floor of $6 cash. But I think you have to use whatever rally we get here over the next 2 or 3 months to start getting something done on 2013 corn, because we have the potential, if it rains and we have subsoil and we have a ton of acreage with poor yield or poor demand, we can be buried in corn again. I mean, if you sit and think here, what would have happened this year if we'd gotten just some key rains and a little moderation in temperature? We'd be burying corn right now. So don't let yourself get too wrapped up in this tight situation we're in right now.
So the time to plan for next year's sales would be from now until South American harvest, do you think would be lock it in before then?
Probably.
Somehow.
And on beans, the real risk is South America. If they have the big crop that everybody's projecting, then we've got a really nice tight situation with some great opportunities being created in old crop beans up until mid-early March. But if you look, they've already discounted that 2013 crop price by a couple bucks per bushel, and there's a reason for that. Everybody's anticipating, and there are some that are talking about a 2 million acre increase in beans in the U.S. next year. So you have a big South American crop. We produce another big crop. Boom, we're buried in beans, and all of a sudden, $13.50 to $14 November 13 beans look like a heck of a sale. And I think those I guess those would be my objectives. If you can get up in that 13.50 to 14, I'd start making some sales.
Do you have the same advice for wheat producers?
I think on wheat, the same thing. The Australian wheat's probably going to be okay. There might be some support in wheat because winter wheat doesn't get planted and doesn't grow because of dry conditions. But I guess the Black Sea area and how they produce is really going to be the wild card there.
All right. We've had a couple of questions here from folks they have some concerns about their crop insurance prices this October. What kind of effect do you think that's going to have on farmers who are counting on these high prices for their crop insurance?
Huge. If you get a recovery rally, I mean, you can lock that in just like you can the crop you're growing. And certainly if you can use this rally that was started on Friday, it has any carry through, and you can get corn back up in that, I don't know, 7 $80 to $8 range, I'd certainly look at that as a way to start locking in and guaranteeing yourself a good price on that through October.
All right, and likewise for beans.
Likewise for beans, absolutely.
All right. Jeremy in South Dakota has a very simple question. Are the highs in for grains?
I believe they are.
Yeah.
I think that 849 on corn is going to hold, and that 1779 or whatever up in that area on beans is probably going to hold too. Maybe if there's some really unexpected thing comes along here, that might get tested. I wouldn't rule that out, but I think it's going to be very difficult to take those out.
All right. Tim in Crookston, Minnesota is wondering, why are we having this up until today, Friday, this current slide in the markets? Is it just harvest pressure? Are we looking at just a temporary pullback?
I think a combination of things. One huge one is that the funds have just lost enthusiasm for being long grains. They held it from the middle of June all the way up till recently. Up till now they'd made good money being long. I think they just are looking at other things that gold and silver and that might move and have just lost their interest in being long corn. So they've liquidated. Part of that's been prompted by the fact that we're getting a better yield report. Everybody thought we were going to have this disaster, and it didn't turn out to be the case. Exports are practically zero, or were this week. So there's some reasons they did just. Plus, a lot of those guys are trading technically, and all of the technicals have turned negative, which that sort of feeds on itself too. So there's a lot of reasons why it's hard to maintain corn at $8.50. It just is. Demand goes away when that happens, and so does the enthusiasm for owning it.
Now, you mentioned demand going away for corn at $8. At what point do you see export demand picking back up? What sort of price level do you think we have to get to see that come back to where it needs to be?
Well, that brings up an interesting point because we talk about demand destruction. And I don't know that we necessarily have demand destruction. Well, we do in livestock, because once you sell the critter, it takes a while to get those herds rebuilt. So you've got demand destruction in that respect. But if you have cheaper corn, ethanol, boom, pops right back up. That'll come back in a hurry. I think export demand would too if you drop the price of corn. Up to this point, South America's undercut us. The Brazilian corn's been cheaper, so they've been going there. But if we can go back and get competitive, we'll win that back pretty quickly. So it makes a difference for sure.
All right. Well, thank you so much, Tom. Really appreciate you having here. Really appreciate your words. That wraps up this edition of the Market Plus segment.